Hey Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over some of what we were saying in the last episode here, where I was putting out, right, that we did have that warning for the double top, and then, of course, the bears are back, right? The bears are back. There's that sneaky bear in the background looking to take us down, and we were looking for Bitcoin's golden parabola to perhaps hold us up. Now, let's just take a look at what we were saying in that last episode.
Especially if we take out this wick low, most likely we're going to get another impulse where I would suggest it's probably going to tap into that low 80s, right? Maybe even that 79K region. This is just such a steep drop over here in terms of like reciprocal candles that, it could even shoot even lower. So I'm very much aware that this is a very dangerous area. However, coming into the 70s, we do have some interesting structure to potentially catch us, right?
Okay, guys, so that was on the last episode. You could see that, of course, we were giving out warnings around that 90 to 93K area. We did end up breaking down. Those warnings were given in the group, especially multiple times, where if we did break down from 90 to 93K, we did have that potential for the double top that we were looking at in the episode prior to the one that I was just showing you. And then, of course, we did get that breakdown from 90K. We did a back test of that double top formation, which is always a harbinger of doom. And of course, that back test did lead us lower. And where did we find ourselves capitulating down to? Well, look at this, right at that, basically that 79K area that I was talking about, that 80K, 79K area. We did wick a bit lower in this chop, but of course, we're just grinding it out sideways now. So a lot of people are looking at this as a potential uptrend, but let's go ahead and put this into some context because we did get that breakdown from the 90s and we did validate it bearishly. We do want to get that fuller context. And here you can see that we did have a bearish, I believe this is a crab harmonic, that could take us even deeper, guys, down the abyss here. Now, we did overshoot that harmonic target, so, I really didn't give it too much credit just on its own. However, we did hit its first target, and a second target, if we go ahead and throw our support and resistance on, could be quite deeper, maybe in that 68 to 70K region. So if we do get a pullback, right, if we do get a pullback anywhere between this really 77K to even 65K, that's definitely fair game for this harmonic to be expressing itself in terms of volatility waves. Now, volatility waves aren't everything, but the fact that we do have a confluence with this big area that I was talking about, where there's really not much support there. So are we going to just self-generate support in the middle of nowhere? There's no historical structure back here. This was higher than our previous market cycle, so there is absolutely nothing to catch us in this area except what current buyers this cycle might be doing. And if we do want to have greater support with past buyers or buyers using data-based purchasing levels, then we may have to wait for that 68 to 70K level. And of course, if they want to front run it, well, this would be a good front running area, but they may want to see a little bit more support being put in there. Okay, so how can that support express itself? Well, let's go ahead and just take a look at our divergences here. Now you can see that at the top of the market, we did have multiple drives of bearish divergence. That's when I was giving you that warning about the rising wedge that could break down there. And, that was given exclusively in the group. Guys, if you want to sign up for the group, the link is in the description of the video below. Please do check it out. I'm sure a lot of you would have liked to have gotten out of this market right on that peak, right where that was that the bearish divergence, and then also the breakdown off of that bearish rising wedge. Of course, I did share that 90 to 93K area with everyone, just to make sure that everyone had a fair shot of getting out before that double top validated. Okay, now I was a double top skeptic before we broke down, but I gave you the conditions for that breakdown in advance, and we absolutely nailed it. So you guys should have at least been able to cover your butts there. And of course, if you're a paying member in the group, then you got an even spicier heads up there, and probably just saved everything in your pocket. Now this is breaking down, and you can see that we are hitting my levels, right? Here's my level, and here's my level over here. Bing bong, right? So we're kind of playing ping pong on our way down, and the next level is that 60, basically 66 to, let's just call it 70K. If we are to get a pretty strong reaction, it'd probably be in that neighborhood. Now, you may be asking yourself, if we have this harmonic, which overthrew to the upside, could we overthrow the targets to the downside? Yeah, this could be a capitulatory event. And, we do have nice structure underneath us. Now, there are, kind of intermediate levels, which we might be able to catch ourselves at, maybe 60. But let's just say that this thing just goes for extreme capitulation. Then we would be looking at that essentially 48 to 55K area. Now, if that number sounds familiar, there was that mega whale shorting the market down to the 50K region just recently. And of course, he did pull his trade. But, if that mega whale was seeing the same thing that I was seeing, then that makes sense as a logical target if he really believed that there was weakness in this chart that could flush us down. And Jerome Powell's statements on the Federal Reserve Day last week didn't really give the market that much confidence. Now, it's true that tightening may be ending, but he did not say that tightening is ending. They're just going to be tightening less. In other words, they're still going to be restricting the market to some degree for at least the next month. And he also raised the chances that GDP growth could be lower, and also that inflation could be slightly higher than expected. So the combination of these multiple factors does give bears a slight edge towards that last final shakeout, that last perhaps a capitulatory moment. Now, whether it comes to this level or this level or this level, unfortunately, we just don't know, right? But you can see this through line that could potentially take us, really to any of those stops before we get into these old buyers, right? Where there's a nice chunky price action that led to this impulse. And then those old buyers probably would step back in at least for a nice bounce. Okay. So there's the simple outlook. But if you want to take a look at maybe a couple more advanced things, we can zoom out and take a look at my golden parabolas. Now here, we can see that these golden parabolas, of course, come into play in usually most markets that do have blow-off tops. And we can see that golden parabola just taking us to the end. You can say there was kind of a double top on this market. Now, the classic way of describing this 2017 market was that it was a blow-off top. But really, if you do zoom in here on the daily, you can see that there was a nice double top and a lower high. So that had a lot of structure there that was being built off of that golden parabola. And really, the market was over when we broke my golden parabola, right? So fast forward, what did we see in the next market? Same thing, a lot of juicy price action just built at the bottom of that golden parabola. This one was quite a magnificent structure with all of that free money that was just infinitely money printed, more structure. And then we did start to get spider lines, which was hinting at a possible top at this area where Jerome Powell was giving, signals that maybe the Fed was going to start that tightening process, or the inflation was getting a little bit out of control. And that's when I did suggest to the Alpha Fam that while I'm bullish and I do see the possibility of us getting to that, maybe 90, 100K target, whatnot, we all wanted to reach that. We all had that kind of in our sight, right? We did have to understand that once we broke that golden parabola to the downside and also off of that bearish news, there was a very high likelihood that we were going to see a strong collapse in this market. And I did suggest that after 70K, we should be on strong warning watch for some type of a collapse if that ends up being a deviation, because essentially we lost these trend line levels, okay? And you can see it's nothing to sneeze at. They were all pointing towards this area as a potential collapse off of that parabola. And even if we go back to this market, okay, you can see that we did have some type of internal spider lines. They're not perfect. You know, this was kind of the nascent market, but you can see that we did have some kind of indications that this was going to be a potentially toppy area in here. And sure enough, as soon as we broke that kind of deviation right here, we, above this area, we deviated back down, broke the parabola, and then it was game over. So, should we be watching for something like that this time? Well, if we do, then you can't see where our spider lines are pointing right now. That would be approximately in the 100K area. And if we are going to really have another impulse to the upside, I'll probably want to see us not just to break that 90K area to bring us back in this range, which, yes, we could easily make a double top in this range, just a bigger double top that ends up breaking down off of that golden parabola, or we could even have a little blow off top here and then, break down under this area right here. Again, all the spider lines are pointing to that 100K being very psychologically important for us to hold. And so I can see us either getting rejected here and breaking down, or flipping up here, holding that as support, and then maybe doing something crazy right before breaking down. And I'll show you my vision on that a little bit later in this episode. But let's go ahead and move away from the golden parabola, because again, although we do have our horizontal zones, we can't see that 100K psychological level is really being pointed at as a potential breakdown point, make it or break it point, essentially, where we can have this broadening wedge of impulse, maybe to the upside, maybe to 115, or overthrow that area. So again, if we flip that 100K, I'm pretty bullish that we can get maybe even significantly higher off of this parabola. But if we start butting our head into this area and we're really not able to cross that 100K, and we just run out of time in this market and we start getting trapped under there, under the parabolic area, I'm going to consider this a breakdown in this chart, and I'll probably looking for the end of the market, sadly enough, okay? But we're not there yet, so we don't really know which one's going to be which. But if we do go ahead and just take a look at our current structure right now, this is more pressing for the day, and you can see, just like we had that bearish divergence here and the breakdown on that rising wedge, we do have that bearish formation. But the difference is that this time we're coming off of bullish structure. So there is a chance that we could have a failure of this pattern just because of that bullish divergence that's starting to build up, whereas we had bearish divergence up here, we're having bullish divergence down here. And although this is a 70% chance of breaking to the downside, there's still that 30% chance of a popping to the upside. And I would suggest that another retest of that 90K level could be in order, especially if we get like a throw up like this, and then maybe have a breakdown. And if it's a shallow breakdown, right, where we maybe get something like this after throwing up and then having a shallow breakdown, that could end up being a higher low that ends up making this essentially an inverted head and shoulders that could bring us back into this top range. So we are going to be looking at the potential for a recovery here, as long as we're not breaking down from this rising wedge just yet. If we do break down immediately, then yes, I am going to be looking at a level lower, right? I'll be looking back to that 77K area. And, let's go ahead and take those rising wedges off, because we do have an additional formation here where we can see that, this is sort of setting up a indecision wedge where we don't really know if it's going to break up or down. We have lower highs, we have higher lows. It's kind of like moot, right? It's just negating itself. And so we don't know if that measured move is going to take us up into this region or if it's going to take us back to our lows. But that impulsive wave here would suggest back to our lows, back to that 68 to a 70K area. Again, maybe they front run it, 73 to 77. We do have some type of internal diagonals that could point to maybe 73 to 77. And we catch ourselves there and then maybe make a higher low. That would be a good opportunity. However, we do have to just take this at face value for what it is right now, a little bit of indecision in the chart. And that's also setting up a bear flag off of this indecision wedge. And that bear flag also has a measured move to the downside there. Okay. So, worst case situation that I'm looking at the immediate moment is that we do break down to those lower 78s, those lower 70s, those upper 60s, and then we'll see what type of support we get historically back here. But again, as long as we're above this kind of 83, 84K area, we still have a chance of popping up to the upside. So it's, we're at the top of that range, and that's not a good place necessarily for an entry unless we flip 87, 88. Okay. Then we'll clearly be making bullish structure to the upside. But as long as we're hanging out down here, we're more in danger of breaking down than breaking to the upside, just because we're at resistance, right? And so the entry area is support, or this is a potential shorting area. I'm not telling you what to do, just showing you the risk profile here, okay? Let's go ahead and put that flag back where it belongs. And let's take a look at a scenario that could be coming up, right? Because we do have these falling, this giant falling wedge also being formed, and it would be completed if we did get sent back down into that upper 60s to lower 70s area. This wave structure here, maybe 1, 2, 3, 4, 5 wave structure, and then a breakout. I could see this as quite plausible, and then we would have targeted moves where if we did break down off of that bear flag, we could then form a bull flag here that then popped us back up to that 93 area, which again is that logical area to retest, okay? And if we do break to the upside here, we would be breaking out of that falling wedge early, and the measured move would still be the same, but it could take us all the way to the top of our chart. We may actually end up retesting 105K if we do break out in the next couple days, in the next week or two, okay? So I'm going to be looking to see how do we treat this area. Right now, risk is in the favor of the bears. We are at multiple points of resistance, and we do have a bear flag to the downside. However, we do have that bullish divergence and a little bit of a baby uptrend forming. So if the market does surprise us with an early breakout, I think that we could be surprised to the upside. And if everyone is betting on more downside, well, then the maximum pain would come by taking us to the upside, and then maybe this is a fake out and they just reject us and we get this back test, maybe something like this. I'm not sure. I can't really, front run that type of double thinking too far. Really, I think this is the more logical setup. And so I'm still personally a little bit more biased towards one more drop down at least. And then we take a look for some bullish structure that can break us out back to the top of our market, okay, where I think enthusiasm will just come screaming back into BTC. But in the current moment, just a little bit risky here, just a little bit risky unless we build more support just locally, because it can actually just build its own support, get a squeeze, and then just keep on going. We don't have to obey any particular pattern, and we don't have to obey past support and resistance. It's just that markets typically do. Okay, they typically do. So let's go ahead and take off that bull flag and that falling wedge there. And let me show you the best case situation, the best case scenario that I have for this market. If we do respect my parabola, and if we just grind kind of sideways, maybe get that bear flag to the downside, then a bull flag to the upside, we could even generate a much larger bull flag, even if we do get first rejected at that 90K area. We start just building higher lows and higher highs off of a nice macro structure, just like I was telling you in the last area. They put us through the meat grinder into the parabola, and then they just take it up, sort of like what we did right here. That would be my best case scenario. And then I'm looking to flip that 100K area. And if we do flip our spider line over here, which I would suggest somewhere around that 110, 115 area, then I could see a blow off top even headed into the 120s to 150s, where I do think that we would be pushing our luck, and probably this thing is going to get exhausted pretty quickly And you can see these through lines here are suggesting, you know, you're going to be pushing your luck, right? If you get any, if you have targets higher than that. So I'm really looking at this as probably our best case scenario if we are able to hold my golden parabola. Now, guys, how would this market end off of that? Well, you know, I can use just some type of fractals from multiple different cycles. I can go ahead and just take a look at, you know, typical market behavior where we maybe get that throw up. And then as soon as we break down from that spider line, as soon as we break down from that parabola, probably we're going to do what this market always does and come back to this macro support. And that could easily be back into that 50s to 40, maybe even 30K region. Why? Well, those are still higher lows. This asset is still appreciating, but that's a very dramatic fall there. Let's go ahead and take a look at our fibs. Yeah, you can see that that's going to be in the 886 to 786 region. Okay. What did we have in terms of a pullback in the last cycle? Right. Right there at the 786. So that's pretty reasonable in terms of a market target to the downside, especially if there's a recession. BTC has never been in a recession before. And so, you know, even though the market bottoms have been getting higher over time relative to the tops, if we do have an actual recession, then I think we might want to just keep our targets at some type of a typical area like the 786 and the 886. Of course, it all depends on where we top out at, where we're probably going to bottom out. And I would suggest that probably we're going to get some type of a bounce around the 50%, where we do get that dead cat bounce, right? You know, sort of like this right here, right? But that's not necessarily the move that is most likely to continue up to 1 million or anything. It's probably over. The parabola has been broken. It's just the back test kind of proving the rule, right? That we're going to go deeper to the downside. Now, how about the worst case situation? Well, the worst case situation is that we do have these spider lines here that are already pointing to the downside. And you can see this internal kind of middle line. You can see the top line. You can see the bottom line. They're all pointing towards the bottom of the market. You can see over here that, yes, we had those fake outs to the upside, right, to the 100K kind of fake out. But really, we started to generate this internal midline, a couple of internal midlines that did point us down to 16K. We had this trend that pointed to 16K. We had this bottom trend. They all pointed to 16K. Where did the bottom of the market end up being? 15.5K. Okay. Now, what are we doing right now? We do have some internal spider lines that are pointing us towards 36K off of this last formation. We have some internal diagonals which are pointing us down towards that exact same point of 36K. So if we do end up breaking down just right here, backtesting like this, I don't know, hang on to your hats. Maybe we're going to go for quite the ride, okay? But then I would suggest that that's probably the bottom of the market. And, you know, this is the one that could continue to carry us up just like this right here, okay? So this is what I'm looking at in terms of the worst case. It's also what I'm looking at in terms of the best case. Currently, we are just riding up that golden parabola, so the market is appreciating quite nicely. We don't know if BTC is going to act as kind of digital gold, or is it going to act as a risk-on asset that then gets degraded in an anti-risk environment, which may continue should the Fed's predictions come true, where maybe there's a little bit less GDP growth and a little bit higher inflation. Then, you know, BTC being a new asset in the ETF markets, those ETF traders, they're ruthless. They'll just sell at a drop of the hat. They are not the true believers of this asset. They are not the ones that just want to hang it on, hold on to it forever, right? Like Michael Saylor. No, these guys just punishingly trade to the downside. You know, if they get that opportunity, they will just take it down. Okay, so the ETFs are a double-edged sword. It has much more exposure for BTC, but at the same time, those traders are not loyal to this asset class, and they do not believe in it the way that many people in the crypto community believe it as gold. They do not believe in it yet. They want to see it prove itself. And so they will have no problem dumping their entire bags, whereas, again, the crypto community would probably hang on to a little bit because they see it as an alternative to cash. They see it as an alternative to gold. And so they're going to hang on to it. Just watch out for these ETFs as they grow in this market. Those ETF traders, they are not loyal. Okay, they are not loyal. They only want that short-term profit, and they'll cut and run, and they'll just be in something else. Okay, that's your alpha for the day. Stay safe and happy trading.